Bonjour.
Good morning. Welcome to this press conference regarding the 2011 full-year results of the AXA Group. The leaders of the group are on stage, and we will first hear Henri de Castries, Chairman and CEO, who will talk to us about these earnings for 2011, and Denis Duvergne, who will then cover financial performance. Other members of the leadership team are present as well. Jacques de Vaucleroy, in charge of 2 regions, and also the live segment that he will be presenting the earnings of for this year. And Laurent Granier, also in charge of the global P&C line. Véronique Vane, Chief Operating Officer of the group, and Denis Duvergne will also be available to answer your comments at the end of this presentation. I would also like to tell the people who are listening to us on the net that they will be able to partake in this Q&A session. Thank you very much for your presence this morning, either in the flesh, in the room, or virtually through the net. Thank you very much.
Merci Garance. Bonjour à tous pour cette séance de présentation des résultats annuels.
Thank you for being here for this 2011 full-year earnings presentation. What are the characteristics of 2011 for us, and which conclusions can we draw regarding our own performance? 2011 quite clearly was a year of upheavals and ensuing shocks, and in this relatively uncertain context, the vessel has withstood the flows, and we are quite clearly on the road to achieving the objectives of Ambition AXA. Why? Because there were certain events which impacted our business and impacted our clients. Of course, the Eurozone crisis that we all have in mind because we experience it on a daily basis. Also accompanied by a slowdown of economic growth in the US as well, the debates on the American debt, the uncertainty regarding recovery, which is slowly but surely disappearing, this uncertainty. Also, the very significant earthquakes in Japan, in New Zealand, natural disasters, economic shocks, political upheavals, which have made the world dangerous and uncertain, but in the midst of which AXA demonstrated it had the strength to resist, because our underlying earnings this year have made progress, although modest, at 3.9 billion. Net income much higher at 4.324 billion euros. And the solidity of our operations during this crisis period allows us to maintain a stable dividend per share for our shareholders, which is a strong signal in today's environment. Now, a few words on what we mean here regarding our clients. The resistance and robustness of an institution such as ours is a particularly important point, because we take long-term engagements vis-à-vis our clients, and in these engagements we also have the capacity of being by their side to support them in case of upheavals on their end, which is what happened this year. And I think it is particularly important and symbolic to note that this is also the year where we have crossed the threshold of 100 million clients, demonstrating that our customer base has trust in us and that we are in a position where we can gain more clients, which is not the case for everyone today. Why can we bring in new clients? Because we deliver on the promises we make. To give you an idea of what our business means on a daily business for our clients, last year we paid out 18 billion euros in P&C claims. So while there certainly is contribution to economic strength, to growth, and to repairing damages, whatever their origin, 18 billion euros were transferred to our clients from the company to allow them to face up to the difficulties they encountered. Over and beyond 18 billion, we've also paid out 10 billion euros as regards contributions to protection and health. Here again, these are very important amounts which demonstrate that the role we play to maintain our economics presence and development are yielding fruit. Third main element, along with P&C and protection and health, life and savings. Well, our clients' savings through the interest paid back to them has increased by 5.5 billion euros. So you can see that in a very uncertain period, we are still professional. We are, of course, involved in protection, but when our clients go through tough times, we are there to act as stabilizers. This is possible thanks to the commitment of our teams. There would be here, of course, no service quality if the engagement of our teams wasn't deep-rooted, despite the difficulties they deal with every day. This engagement has not wavered, and this is why we now have a very stable level of engagement within the AXA teams, according to our latest survey, which puts that at 75%. And I think we also have a very active approach with our social partners. As an example, in Europe, the agreement that we have signed at the level of the European Works Council on anticipating change, it is the very first agreement of this type which was signed in Europe, and it was signed by all unions represented within our European Works Council. The engagement of our staff has another aspect. They also are shareholders of the group, and very significant ones, because they hold a little above 7.4% of total capital, slightly under 8%. And they know what the implications of the measures we implement are in order to improve the efficiency of the company and that of its performance. Last point to underscore in this uncertain time where employment is also jeopardized, we have grown our number. When you know that we have 120,000 people working for us, we have recruited a large number of people last year, approximately 2,000 of whom were recruited in France. Now, third aspect that I wanted to insist on before going into the details of the numbers of financial year 2011, I wanted to underscore how aware we are of the fact that our action plans need to be sustainable. And the talent of an insurer is, of course, that such aspects are taken into account on a daily basis in the way in which we insurers do business. The efforts we have made to further improve perception both by the teams and by our environment of the importance of our action plans are translated in the way in which the outside world considers and views us, because our rating in these areas have significantly improved in 2011. So you see, this isn't just a list of empty words. This doesn't just apply to periods of prosperity. It's much more than that. It is a strategic engagement of the company, which is maintained even during difficult periods. And here I wanted to underscore two quite illustrative aspects. First of all, our engagement in research. You know that we launched the AXA Research Fund a few years ago, which initially had available to it approximately 100 million euros over a 5-year period, i.e. almost 20 million a year, to dedicate to research in such areas as natural disasters, longevity risks, aging population. And also we fund academic research that doesn't bring anything into us per se, but it is important for us that we make progress in these areas And I believe that this particular initiative for amounts that are considerable is quite unique of its type in Europe and quite widely recognized today. Also, what we do with a humanitarian organization called CARE, where we launch very concrete programs in 5 selected countries to establish prevention plans for local populations against the consequences of natural disasters which may occur. So you can see that our approach to sustainable development weathers all storms, whether they are physical or economic. Now, to return to 2011, this is not just a financial year where we demonstrate solid results in a difficult period. It is also one where we have been able to launch AXA Ambition, which is our strategic 5-year plan. The plan demonstrates the trust we have in the success of our action plans based on the indispensable aspect of the businesses we are involved in to cover our clients' essential needs. Customer centricity and the determination to improve their satisfaction is at the core of the project, because we know that as a company, our prosperity depends on our capacity to convince more and more clients and offer more and more competitive prices. And this is translated operationally through 3 major pillars, which involve more stringent selectivity in the projects we select in mature economies. Mature economies are where we are essentially invested today. And in the current economic context, we need to be more selective. And the 2011 action plans bear the brunt of this because we were able to focus on activities with high potential for growth, where long-term margins are satisfactory. This brings us, of course, to underscoring some and adversely to walk away from some areas where perspectives are less satisfactory. Also, revving up of our efforts in emerging economies or on products and distribution modes wherever growth is possible. Here you will see that 2011 is quite revealing of what we have done and what we intend to continue to do. Last important point, efficiency overall. We talk a lot about competitiveness, but economic efficiency is something that holds true at the level of countries, but also at the level of companies. To drop our break-even point, and Véronique Veel will be here to talk about this, but of course this covers the very important aspect this represents within the AXA Ambition plan. Now, to return to our 2011 earnings, I think that the results demonstrate that our directions are the right directions, and this certainly is what we need to implement if we are going to weather the storm of this very unstable economic period. What have we noticed in most of our activity areas? Well, first of all, an increase in margins and selective growth of a very satisfactory level in countries where we have decided to focus. I will first begin with life and savings, which of course are a huge bowl where we that we fill up with different activities. Protection and health first, because these are long-term activities where our competitive edge differentiates us from other economic models or from some of our competitors. In these areas, the volume of business has grown 13%, and new business margins have reached 47%. This is exactly the illustration of what I was saying earlier on. Margin and growth combined. Now, unit-linked business, savings, and a form of savings that we wish to further and nurture. Despite volatility and market uncertainty, we have been able to resist relatively well, and in France, we've even gained market share on these products. Why do we want to maintain a presence here and resist? Because we consider that these are positive for us and for our clients. And you can see that new business volumes were dropped only by 3% and that our margins are at 23%. On the other hand, what we call in France Euro funds and that Anglo-Saxon countries call general funds, these activities are less attractive to our clients, less appealing to us as well because they yield negative margins. And you can see that here the volume of new business is shrinking, which is absolutely normal. And this leads us to a stable total volume, but with an improved mix and improved margin. In P&C, we have a very satisfactory progress here to boast of. And we are slightly ahead of our projections in June. So we can today bring in new clients by increasing our profitability, which is a very favorable omen as to the achievement of our AXA Ambition strategy. And we believe that within the calendar of this action plan, we will be able to improve our profitability levels. Also, the impact here of our investments. In June, we had announced a productivity effort which should lead us to save 1.5 billion euros over a 5-year period. In 2011, we have saved 300 million euros, i.e. precisely what we had planned to do, even slightly above what we had planned to do. And we are now left with a savings of 1.2 billion euros over the next 3 years, and this obviously seems quite approachable. But the future of a company is also built on its investments, and we will continue to invest. We invest in our areas of business, on our operations for a little under half of these investments, on our distribution channels for approximately slightly under 1/4 of our global investments, and in what we call support functions, i.e. infrastructures, also for approximately 1/3. And we invest in all at group level approximately a little over 1 billion euros a year. These investments are necessary if we are to pursue the development of the group, which of course requires efforts on productivity. Ambition AXA is not something which is limited to improving competitive productivity or margins. It is also an exercise which allows us to reposition our means. One of our means, of course, is our capital, which is a more and more costly commodity for most financial institutions, and that we must, of course, allocate as precisely as possible to the priority activities and or geographies. In 2011, we very actively managed our shareholders' equity, and we will continue to do so in the future, which differentiates us from a large number of our competitors. We're much clearer in the way in which we cover our scopes. We have repositioned over 4 billion euros in capital. A little over 3 were dedicated to investments on high growth markets, and approximately 1 billion euros dedicated to the group's disindebtment. Also, the buyback of our minority interests in Asia. This operation allowed us to increase our exposure to emerging markets. At the same time, we have divested from a less appealing activity in Canada for a lower price. And in fact, when this very recent hindsight puts us in a position where we can begin to decide whether we were right or wrong to adopt this positioning, what we can see today is that on the Asian markets, we have a double-digit growth in our activities in life and savings and in P&C, which demonstrates that repositioning the capital of mature economies where on some of our business segments or for some products, our margins can be insufficient or capped, to emerging economies where results are much more dynamic, can be an approach that can produce extremely appealing and satisfactory results. This does not mean that we have given up growth in developed economies. There are different product mixes, different distribution channels, such as direct insurance, where we will continue to extend our presence. But of course, this involves greater selectivity as regards the way in which we do business. Now, the contribution of emerging economies contributes more and more to the group's growth. Our financial solidity is essential in these troubled times because many people are wondering about the stability of the financial institutions. Ours is quite strong and is based on two pillars. First of all, the diversification of our business model, and secondly, very solid balance sheet. Diversification of our business model is double diversification. It's both geographic and in our business lines. The geographic diversification you can see here on this slide is such that no geographical area in the world represents over a quarter of our activities. So if there is an upheaval, either through natural disasters or through economic upheavals in one region, the loss in that particular area will be offset by the diversification of our operations everywhere else. The fact that our activities are fairly well balanced between three major areas of business, which involve protection of people and goods. This also helps us reduce our risk profile through P&C, through people insurance, and through savings. P&C today represents in results approximately 45% of the group's results, in earnings volume a little less, health approximately 1/3, and savings a little under 1/4. This diversification, and we can see this clearly in 2011, leads to the fact that if there is an area of business which is not as healthy during a given financial year, others can partially offset the weakness. Nothing is ever perfect, but risks are never major because the diversification that we have implemented allows us to offset the worst. So a business model where solidity is based on diversification, and you will note here that this is something that is more and more confirmed since the year 2000. We have undergone practically uninterrupted crises without ever losing money, without ever having to re-inject capital under constraint to strengthen our shareholder equity. Which brings me to the next point, which is our solid balance sheet. Now, Solvency I ratio, which is the current regime, is at its highest point and has been since over the last 5 years, despite the crisis. Solvency II, the economic solvency ratio, which is the future regime, which may be applicable within 2 years, is a ratio that has certainly dropped, but which still remains at a level where we are still quite comfortable. So this strong balance sheet is very interesting because many other financial institutions worldwide have, due to the crisis, been severely degraded in their ranking, whereas you can see that ours have remained stable. Of course, the outlooks are negative, as is the case for practically everyone in the Eurozone. But our ratings have remained stable, which is, if we compare our position to that of other players, is the proof that our solid balance sheet is recognized as such. The appropriate features of our different approach, the strength of our business model, and the solidity of our balance sheet give us confidence in the future and also allow us to maintain a stable dividend. Why? Why are we doing this in an environment where many institutions, including other solid players, are reducing their dividend levels? We do not consider that we need any additional capital requirements, and our operating cash flows are such that they allow us to remunerate our shareholders, because there are some extremely fashionable discussions of shareholders versus the dividend paid to our teams. I would like you to observe that for the 40 billion odd shareholders' equity put at our disposal is at 1.6 billion euros, where the group pays in salary every year 8 billion euros. So we believe the difference in the dividend is quite reasonable. This dividend is also a sign of confidence in the future. It is a distribution rate of 49%, which is in the upper range of what we intend to pay out, but we believe it is the just remuneration of risk. And I'm now going to call Denis to give us more details on our results and financial performance. Thank you, Henry. Good morning, all. I am going to comment the group's results, but I will be helped by Jacques de Vaucleroy on life and savings and Mr. Granier on P&C. Now, if we look at our revenues in line with first half year, we can see there's a slight drop of 2% on a comparable basis. And this earnings level must be, of course, examined with the progress in our results and testifies to the results of our selective approach. We prefer margin to volume. As regards life and savings, we've had a drop of 4% in the earnings. Here there are different trends according to geographical areas. Progress in the US, Switzerland, and Asia. Drop in France, Belgium, and Italy. This reflects, of course, our different selective positions, which have been applied to life and savings in a low rate environment. But also this demonstrates the success we have had as regards protection and healthcare that Jack will return to later. In view of this drop in our earnings, we've had a net inflow in 2011 everywhere, including in France. In P&C, we've had a growth in earnings of 3%, confirming the strong trend of the first half year. This growth is largely explained by price increases, but also by the arrival of new clients, particularly on very high growth markets and in direct insurance, as well as in some mature economies. Our revenues here by segment, of course, is strong, as you can see. And this performance, as Henry said earlier on, is, of course, proof of our strength despite a degraded environment. And the priority given margins has yielded fruit. The performance is particularly brilliant for P&C, where progress is plus 16%. Also, asset management has had strong progress in view of the non-recurrence of exceptional items which had impacted the earnings in 2010. I'll return to this later. Life insurance and the drop here can be explained by three exceptional items. Scope impact with the divestment of our UK activities in 2010, and Australian and in New Zealand as well, beginning of 2011. Also second half year 2011, which strongly impacted the variable annuities activity in the US, and Jacques de Vaucleroy will return to this in a few minutes. And then, of course, the earthquake and tsunami in Japan, which strongly impacted our life and savings activities there. Now, our adjusted earnings have dropped by 15%, impacted by the progress in, of course, our underlying earnings, but also our provisions for impairment. We have a provision, just like everyone else, our Greek sovereign bonds, and this time we have provisioned fully. In the first half year, we positioned the maturity dates preceding 2020 in line with the agreement that had been signed in July. Here we have provisioned all of our Greek bonds to restore them to 20% of the peer. And this, of course, has had a substantial impact on our adjusted earnings. The net income can be explained here by the quality of our operational aspects, but also exceptional events that have had positive and negative impacts. As regards our activities in the US, and in view of the long-term interest rate drop on this market, we have decided to reduce by 943 million euros our goodwill in the US, which corresponds to our variable annuities portfolio after accumulator. This is much more than offset by the capital gains on our business divestments for 4.3 billion in the sessions of our Canadian operations, Australia and New Zealand operations, and our Tai Kong Life stake. If we now look at the available operating free cash flows, here we can see that they have progressed by 3.7 to 0.42 million euros, and progress of plus 14% in all of our business lines, which is a very positive evolution, as it is the indication of our future capacity to generate dividends. I will now give the floor to Jacques de Vaucleroy, who will talk to you about life and savings. Thank you for your attention. Good morning. Thank you, Dennis. So we will here present the main numbers for life and savings. You can see that with over 40 million clients, we are present on all continents, with a strong diversification as regards product lines. Protection and healthcare, life and savings are divided between the general savings funds and unit linked. And here we have activities of mutual funds or variable annuities. Also strong diversification as regards distribution, and you can see here the obvious role played by our exclusive network, which allow us to be extremely stable. This slide was also indirectly commented by Henry. So as you saw, the progress of new business value is stable, a little under 1% over the year. When it is subdivided in the different segments, you can see our protection and health, a growth of 13% with a margin of 47% on new business, stable at a high level. This, of course, is the continuance of the Ambition AXA program. Unit linked in a difficult financial market have behaved well, minus 3% versus last year, but with stable margins at 23%, demonstrating strong performance of commercial and AXA distributor teams in an environment where equity-based investments were not really encouraged. Last important point is the general fund in savings, where our higher selectivity policy shows a drop in our new business value margin in our earnings at minus 20%, and this is simply because does not correspond to the best investments in this current context to be made for our clients. So this is why it is logical to see drops in the numbers in this area. High growth markets, where you can see a total growth of only 2%, but this hides a growth of 16% in Asia, which was also screened and hidden by what happened in the EC, which was down in 23% by a total change in our activities in Hungary and a strong reform which led to a drop in sales in Poland. But our life insurance here and savings in Poland have had strong progress in Poland. So pension fund impact, but strong growth on high growth markets. Also, we have a positive net inflow of 3.3 billion euros group-wide, with a progression here of 700 billion euros in million euros in France. Here we can see that focus on high growth markets involve Asia, Europe, Central and Eastern European, and Turkey, Mexico, and Morocco. When you look at the activities in these countries, we can see that there is progress in new business value with a total of 16% for financial year 2011. Which is interesting also is that these activities have higher growth, but also higher margins, hovering around 40% in high growth markets versus 22% in mature markets. And therefore, quite logically, contribution accelerated both for new business values, but also to the Confederation here. And this demonstrates how well thought out our acceleration policy implemented in these countries is, and this allows us to face the future with serenity. Now, the pre-tax underlying earnings according to business lines. First of all, let's begin with the right-hand side. You can see here that we have a deficit in our U.S. variable annuities. This deficit is essentially explained by a strengthening in our provisions and coverage costs, particularly during the second half of the year, which was very important. So here they have only 7 business lines. But on this particular line of products, we've had a negative result, whereas all the other areas in the U.S. are working very well. And then, of course, we have unit-linked and general fund figures where we can see strong improvement. Let's begin with protection and health, where we can see that the pre-tax underlying earnings are up 8%, essentially explained by the continuance of a hike in volumes. General funds savings show a strong progress as well, plus 18%, through the favorable evolution in claims ratio in Switzerland. Also, unit linked up 4%, and this slide is, of course, here one which must include comparable scope for comparable growth. So it is not because you see 504, which is lower than 511, that growth is not plus 4%. A little bit complicated to comprehend, but nonetheless, this slide is absolutely accurate. So our VA activity in the U.S., where the volatility of the markets brought about coverage rates which were much higher than what we saw in the preceding years. This gives us here underlying earnings at almost 2.3 billion euros, which is down 2% if we exclude all the effects of scope mentioned by Denis, which are essentially divestments in Australia and New Zealand and a share of our life and savings activities in the UK in 2010. So this reflects the strength of France and the North Sea region, and also impacts unit-linked products. So this explains the lower technical margin, which resulted from the variable annuities movements in the U.S. Globally speaking, we can say that our performance is nonetheless strong in a savings market, which indeed is impacted by the financial crisis we are experiencing. I think that the group's policy to increase flows towards the different projects is one that will pay off. We have seen a drop in our general fund activities, but these are products which bring in margins that are lower for the insurer and which today we feel are not the response to our clients' needs in a low rate environment. Now, allow me to present here a brief focus on the U.S. The first thing we need to say is that the sales have continued to grow on the left-hand side. A new business up 14%, 1.4. This is a general approach, a general number, and we have more diversified sales. We, of course, have variable annuities, with two generation, accumulator, which is an older generation, then retirement cornerstone, which is a new one. These are new ones, which need, of course, more hedging, more capital than the preceding generations. So we see that the product mix is much better as regards variable annuities, and that non-variable annuities are continuing to grow. The more traditional life insurance activities have progressed by 40%, and non-variable annuities, essentially group activities, have had a double-digit growth of circa 10%. So maintenance of a new business and very interesting mix. This, of course, did not prevent the drop in the underlying earnings, which is minus 32% at 433 million. This can almost exclusively be explained by the fact that the coverage operations of annuities products, in view of the market volatility and the drop in the interest rates, are much more expensive and cost us much more than they did last year. Interesting, therefore, to see here that more structurally our business is on the right path. Diversification as well, because our new products that we have launched over the past few years today represent 40% of our sales in 2011. Furthermore, significant programs to reduce costs and to enhance efficiency have been implemented, which strengthen our own confidence as to the continuance of our positive operational results in the future. Thank you. I now suggest we go on to P&C with Jean-Laurent. Thank you, Jack. Good morning. I'm going to be presenting the P&C results. We're going to be talking about the geographical and business mix of our business. I will cover briefly how our earnings have evolved and what growth drivers we have chosen. We will boom on emerging economies, which, as I'm sure you all remember, are at the heart of our strategy for Ambition AXA. I will also talk about the positive evolution and talk to this activity's global contribution to the group's results, with a focus on perhaps a less well-known activity, which is major risks. Henry said in his introduction that one of the merits of the group's organization is that the activities are diversified, which allow us to be much more resistant in terms of periods of upheaval and uncertain markets. This is something that has grown, which has gone from 16 billion euros 10 years ago to over 27. So P&C is growing strongly in the group. We are in 30 countries, and we service over 55 million customers. And according to the exchange rate between dollar and euro, we are between the third and fourth actor worldwide. We didn't take a risk by positioning ourselves here. It gives us margin for improvement. But we do not have a P&C activity either in Japan or in the US, which are nonetheless important markets. Geographic coverage and diversification are complete. You can see this on the left-hand side of the diagram, with an important coverage in France, and 25% in Mediterranean and Latin America, 8% direct, North Sea 31%, France 20%, 14% UK and Ireland, and Asia 2%. And of course, this is further strengthened by our positions, as I've said, in Asia, which represents strong potential for growth. As far as our distribution networks are concerned, we work with AXA distribution networks corresponding to 40% of our results. These are agents. We also work with the brokers, 45%. They work for other insurance companies. We have partnerships which cover 4% of our distribution networks, and direct and other, which cover 11%, which is why we don't have exactly the same number as the one you had on the preceding diagram. And finally, as far as product segments are concerned, the core product is automotive for individuals or corporate fleets. and we have a large share of our revenue which comes from that particular activity. So here we have 24% in goods insurance, and the other activities such as health, which here is represented at 11% contributor to the revenue. So this has led 2011 to be on a global P&C market standpoint a difficult year, where, of course, this was comparable to 2005 with the Katrina disaster. Of course, there are difficulties linked to natural disasters which did not, quite the opposite, negatively impact our activities and productivity. So once again, they did not negatively impact these. Also here, P&C revenue, 25 billion euros and 27 if we add major risks that I will talk about at the end of this presentation. The drivers of growth in the application of our Ambition AXA approach involves developing on high growth markets, Asia, Turkey, and in the Mediterranean and Latin America, and direct, which has grown by 8% in 2011. High growth markets have accrued the contribution to market revenues by 16%. And we can see that this growth is aligned with what we have displayed in our Ambition AXA program, where we wanted to multiply by 2 our revenues within 5 years, particularly on emerging markets and high growth markets. Now here, personal lines. We have brought in over 1.5 billion contracts here in personal contracts. And this is subdivided between personal and homeowners insurance. And penetration of insurance on these markets, of course, is continuing to grow. Now, most of the P&C activity represents 1/3 of the group's revenue, and you can see that this activity has globally shown 3.5% in growth in 2011. Now, let us look at the spread of these revenues and evolution here per clients. Personal lines representing 60% of our revenue. Growth was 4%. Sustained and pushed forward by strong development in Italy and Germany, but also in emerging markets such as Turkey, where growth exceeded 30%, 3-0, for our personal lines. Commercial lines represent 40% of our revenue, a growth of 3% to exceed 10 billion in 2011. Pushed forward by the Mediterranean region, where growth was close to 6%, and specifically by Morocco, with a growth of 15%, which is a new market over the past 3 years for AXA, but where development is quite satisfactory. Our ambition on both of these segments regarding personal and commercial lines stem from our priorities within the framework of Ambition AXA, to be more selective as regards technical quality. We want to strengthen the way in which we manage these personal and commercial lines to create further value. We want to rev up our position on our new markets and on our direct distribution markets to develop a worldwide presence where we have decided to be present, and also to cover the different direct platforms, and we'll return to this in a few minutes. Now, a focus, as I had announced, on high growth markets. We can see here that they represent 12% of the group's revenue, direct 8%. This represents the weight of these markets in the global revenue of 27 billion euros. Now, if we look at where we bring in clients and where we bring in contracts, we can see that the way in which we develop on these markets are significant. 60% of the net contracts brought in come from high growth markets, 17% from the direct business. So here we can see that our strategy within the Ambition AXA program has certainly been a major booster of growth. As regards profitability on these specific markets, is this growth carried out by leaving profitability aside or postponing it to a later date? Absolutely not. You can see here the illustration of global combined ratio on high growth markets, which has gone from a little above 99% to 98.2% in 2011, which means that growth is not there at the expense of profitability. As regards the direct activity, you can see very swift growth and improvement. It is one which requires tremendous investments initially, which is why the combined ratio are under 100%. We have dropped the combined ratio of direct activities by 3 points to reach 105.4 in 2011, and we are planning to improve further in the coming years. Now look at this diagram, ladies and gentlemen. It explains how our profitability has evolved between financial year 2010 and 2011. Here we can see the combined ratio involving claims paid out to our clients, overheads aligned to premiums brought in. This is composed of two specific factors. We here, of course, have loss ratios, expense ratios, and the benefits brought in on the basis of provisions earmarked in the preceding years. On the left-hand side, you can see that in 2010, the combined ratio was at 102 odd percent, and that we had benefited from 3.1% of bonuses on preceding financial years. Now in 2011, first interesting element, the combined ratio on the year is at 99.6 and is almost at the same level as that of the global combined ratio of the preceding year, which means that 3.5% is not at all exceptional, but rather tenable over the long term, and this is the one we have been able to obtain this year. Now, if we talk about the wealth of our balance sheet, we can say that the danger here has dropped because we have reserve development, which is at minus 1.7% for this year. And despite the preceding year, which certainly was one of the most favorable over the recent periods. Nonetheless, our combined ratio is at 99.6% on our financial year combined ratio, which has improved. Now, results, contribution to the group's revenue. The underlying earnings, strong growth at plus 16% to 1.8 billion euros. I will come back to this activity in greater detail regarding positive underlying earnings, which comes from the major risk activity, and this covers over 2 billion euros, which are in fact the contribution of the total P&C activity to the group's results. This involves 45% of the total group operating result, and you can see here that this result, as the revenue, are quite equally spread between the different activities, because most of the world's regions significantly contribute to this particular evolution, a positive evolution of the result. And as has been mentioned earlier on, direct is negative in 2011. In fact, there were specific difficulties on the UK market, but this activity will contribute quite positively in the future and will certainly be at break-even positive next year. Now, to conclude, ladies and gentlemen, as I had announced, to focus on large risks. This is a specific segment which is covered by a dedicated company called AXA Corporate Solutions. It is a segment which allows us to insure major risks for companies in such specialized areas as marine, aviation, and space, but also very large international P&C corporate risks. And most of the French large multinational companies are our clients through AXA Corporate Solutions, known as ACS. And here the global turnout here was extremely interesting this year. And we also have a very strong presence thanks to the network of partners working with ACF. So we are the third European player, and we are present in 99 countries. So we can see in 2011 the result is slightly down versus 2010, because 2010 had been an exceptional year. But at 150 million euros, this is the result of a combined ratio of 97.9%, which, if compared to what was given for the group as a whole, shows that we are quite aligned with the profitability standards which are expected for P&C in the group. In conclusion, what I would like to say is that the AXA P&C business is doing well, despite 2011, which has been submitted to upheavals, both from the natural and climate-driven factors, as well as due to economic drivers. But we have, of course, contributed to the group's result. We are resistant, resilient, and we are a major factor in the group. And what is interesting here is that in 2011, we will have been able to see the first results of our engagements. Thank you very much. I'm going to be talking to you about asset management. We'll begin with asset management first and then go on to the balance sheet. AllianceBernstein and AXA IM. And I'll go straight on to the next slide. This was a year with high contrasts. We can see a drop in 2% in our asset manager results due to negative inflow of 28 million euros. This is much less negative than was the case the preceding year, twice less negative. I'll come back to this later. Our asset managers manage assets for the insurance companies of the group, because we believe that for a group such as ours, it is important to manage assets which are aligned with the engagements of our insurance companies, but they also manage for third parties, details of which are in the chart on the right-hand side. The group still continues to manage 1,001 billion euros in assets managed, making it number one in the world. The group was a fairly favorable one. We here have a drop in inflow at AXA Rosenberg, but I would say that this is the end. As you know, we had a slight issue in 2010 with AXA Rosenberg, which involved a large number of exits. In 2011, there were more exits at the beginning of the year, but the situation has turned around. On the basis of other expertise, we have had very high levels of performance of asset management 2011 and positive inflow of 4 billion euros. Inflows which involve AXA Private Equity, AXA Real Estate, AXA Framington, amongst others. But what you can retain is a very good investment performance and an inflow which is returned to positive, which allows us to salute the very good work of Dominique Arbia and his teams. AllianceBernstein, the situation is a little more difficult. In the U.S., our asset manager has continued to suffer from very significant negative inflow. It was a very perturbed year, where many asset managers have had, of course, bad results, and AllianceBernstein had fairly contrasted performance results on equity and a drop, of course, with this negative inflow. I would say here that a program is being implemented at AllianceBernstein. We can see progress in long-term strategy in favor of an improved investment performance, diversification. Also here, assets and liabilities management with alternatives and other bringing in 22 billion, giving us an indication that we should feel encouraged by these new developments. Here, the underlying earnings have progressed by 20%, sustained by progress in revenue at AXA IM, and by the non-recurrence of provision, which was earmarked last year for the AXA Rosenberg issue. We can see a degradation here of the underlying earnings coming from average assets under management, which had not been as offset as we had thought it would be by a drop in expenses. Now, our balance sheet, ladies and gentlemen, the group shareholders' equity have remained at a fairly high level at 48.6 billion euros. Slight drop versus December 31st last year is the result of the following phenomenon. First of all, net results higher than initially planned, which of course involved a reaction on the part of the group. Also here, the impact of the acquisition of minority stake of Asia, AXA Pacific and Asia, which has diminished our shareholder equity by 2 billion euros. So this is, in fact, a little less mechanical in terms of impact. Our solvency ratio is very good, still at 188% versus 182 last year. Under Solvency 1, the economic solvency ratio is little less good than end of 2010 at 148% due to the impact of the Eurozone crisis on spreads, but even more so on state bond spreads. This is a new phenomenon. We thought that state bonds were risk-free. We can see today that they're not. And of course, this has had an impact on our economic solvency. This being said, since beginning of January 2012, we have seen a turnaround in the situation through the Spanish and Italian aspects involved here. And the ratio is now at a comfortable level and at above 150% at the end of January. Now, debt gearing has significantly dropped to 26%. So we are slightly ahead of our plan because we had scheduled to be at 25% in 2015. And you can see that in all, our situation regarding our financial robustness is more than satisfactory. Now, if we look at the balance sheet as a whole, you can see here the presentation of assets allocation matched to AXA's general funds. This involves all of the reserves or provisions, which represent the amount we need to pay out claims in P&C, to pay out what we're going to owe in our protection and savings activity businesses, and the shareholders' equity of the group. So the assets here are at market value at December 31. Asset allocation is essentially dictated by the need to match our assets to the characteristics of our assets and liabilities, and particularly the duration characteristics, so that we can face up to the demands of our policyholders. This has allowed us to prefer asset-backed securities, which represent 2%, which have strong characteristics of maturity and regularity, which certainly make it the most popular amongst insurers. This means that there is a large share of state bonds and a smaller share of corporate equity and mortgages. We can signal here that this portfolio is essentially composed of sovereign bonds and corporate bonds, where ranking is above A. Now, if we look at our unrealized capital gain situation at the end of the year, you can see that they have dropped slightly versus 2010. They're at 5.1 billion versus 6.6. The result of what happened on our markets in 2011. They are still at a comfortable level nonetheless, and balance sheet 5.1, and off-balance sheet net capital gains reach here, particularly as regards real estate and loan activities, which are taken in accounting value in the balance sheet. Now, if we look at the net unrealized capital gains on government bonds, you can see that there are negative results in the countries outside the Eurozone. And we have relatively significant unrealized capital gains in most of the other countries, such as France, Germany, Switzerland, Japan, and other countries such as Netherlands and Austria, excluding peripheral countries outside of the Eurozone. This underscores the diversity of our portfolio as well. Now, if we return to our exposure to the sovereign debt of these countries that are peripheral to the Eurozone, if we equate this to the general fund, 3.5% in Italy, 0.1% in Greece. As far as Greece is concerned, we have decided to partake in the voluntary program of contributions made available to the country by the public sector to the tune of 92 million in first half, which is compared to what had been, of course, discussed at the beginning of the year last year. And at the end, we partook in the agreement, which has not yet been announced officially, but which will soon be, which has led us to earmark in market-to-market value 78% of our bonds, which bring us to 295 million. So in all, 387 million euros. So the sovereign debt of Greece following these provisions is no longer an issue. Now, if we look at our financial indicators, our underlying earnings per share has grown by 4%. Ambition AXA is 10%, but 2011 was particularly agitated in economic terms. Also, group operating free cash flows, we can see a growth of 14%, 24 billion between 2011 and 2015 were aligned here with our project. Adjusted return on equity, we've planned to reach 15%. We got off on the wrong foot because we went from 11.5 to 10, but this is largely due to our provisions for Greece. And of course, we had a drop of 2 points in our debt gearing, aligned with our objectives for 2015. Thank you for your attention. The floor back to Henry. Thank you, Denis. At the end of this very lengthy presentation, what should we retain? 2011, despite the turbulences, was a solid year. When we look at the future, in reality, the group's operational model is one which gives it the resilience it needs in difficult moments and the ability, therefore, to prepare the future. Therefore, we need to remain as nimble as we are to continue to respond to our strategic ambitions in an uncertain context. And the management of the balance sheet and of the cash flow, with this in mind, along with the engagement of our staff and our clients, our engagement to our clients, are key drivers. Something that we did not speak, but what we are announcing is that we are going to proceed to distributing a second round of shares to our staff. We call them AXA Mile shares in the next 2 weeks to each of the group's staff members. 25 which will be acquired without taking into account the performance level, and 25% if the customer confidence index grows current 2012. We believe that this will happen, and we should see here, of course, further improvement of our operating results if, of course, we are not submitted to major disasters. So much for our financial year and perspectives, and now we are ready to take your questions. What I'm going to ask you to do, please, is as soon as you're given the mic, to introduce yourself before you answer the question so that those who are listening to you know who is speaking to them. Thomas Urbain, Agence France Presse. I simply wanted to return to what you said regarding your development on high growth markets and in direct distribution. Do you, in 2012, plan to speed up structuring operations such as opening direct operations in countries where you still don't have any? And secondly, as regards asset allocation, I wanted to know whether you were going to continue working on balancing things out, perhaps with a slight drop in the sovereign fund and an increase in the corporate bonds. As far as direct is concerned, Stéphane Guenec, who's the head of the business line, is in the room. What we expect from 2012 in this area is that we should continue to grow revenue. In reality, double digits. If we look at what happened in 2011, there's 8% growth, and Stefan will correct me if I'm wrong. It would have exceeded 10 if in Korea we hadn't had such a complicated situation to deal with, where the government had frozen prices and so on. So in 2012, we would like to expect a double-digit growth, continuing, of course, the growth year in, year out, which would be remarkable. And we are thinking also about how we can develop direct activities on other emerging markets. And I can't be any more specific at this stage because the pace of this project is not annual, but you need to realize that we consider that this particular development is a driving factor for the group's future. So we are particularly happy with the way in which things are being managed in this area. As far as asset allocation, I'm going to ask Dennis to answer now. If we look at where we invest today, we can see that we invest in approximately 25% state bonds or government bonds, and in the rest in corporate equities or in banking bonds guaranteed by actual securities. Giulia Lucchini, Radio Presse, Italy. Could you increase your interest in the Montepaschi Bank? And we never comment on market rumors, to answer your first question that the interpreter didn't hear. And we are, of course, very interested in developing business on this market under the best conditions. But we never comment on these projects. Now, as regards Montepaschi, we're delighted with the cooperation we have set up through our joint subsidiary in life insurance, which in 2011, in terms of profitability, has yielded exactly what we expected. Our business is insurance. It is not to increase our exposure or participation to bank capitals in Italy or elsewhere. Yes. Florence Labruyère, Libération. I have a question on Hungary, more particularly. It's a very small percentage of your revenue, so this doesn't really impact your results. But these losses are very significant nonetheless for such a small country. So I want to know if you were surprised by the significance of these losses. And secondly, do you fear that the nationalization of the bonds-based pension funds could serve as precedent for other countries? And if that is the case, how do you see your professional climate evolving in these countries for AXA? Well, I'm sure that Jacques de Vaucleroy could go into detail, but clearly Hungary is certainly one of the negative surprises of our 2011 financial year, not because our work wasn't of high quality, but because the regulatory and political framework has very strongly changed, not to say deteriorated. And there is here something that we deplore. The situation, as most financial institutions on these markets have done, have opened our concerns up to the European Commission. And we believe that Hungary is certainly not the best area for investments right now. Hi. Chris Nicholson, Bloomberg News. You are on the management board of private lenders to Greece. Could you tell us where we are on this? Is it too late to save them? I have absolutely no specific comment to make over and beyond what was said regarding the fact that we have decided to partake in extending a hand amongst other private players. Now, the goal is to know whether the public institutions, and particularly whether the Central European Bank and the European Investment Bank are prepared also to allow Greece to be given the support it needs so that its situation could be sustainable over the long term. And also, we need to know whether Greece is really engaged towards working on redressing its own situation as well. Toma, Carla, Jeffy, I have two questions that are totally different from each other. The first involves the annual annuities in the U.S. If I am not wrong, this is the second year where you have encountered difficulties in the coverage of these products. So what is the future of these products in the medium and long term of the life insurance market in the U.S.? Secondly, AXA Private Equity has been in divestment mode now for several months. Where do you stand with this situation, and what is your calendar to finalize the situation? Well, as far as annual variable annuities are concerned, we have to look at this from an insurance standpoint. The insurer is there to give guarantees. In P&C, you are not surprised when there's a storm to see the results drop. In life insurance, on products where we have given guarantees, when you're facing a financial storm, you shouldn't be surprised there either. Of course, there has been loss in 2000, a particularly violent financial storm year with Lehman Brothers, and another one with sovereign debt last year, and what happened this summer. Now, everywhere else, these markets of variable annuities have made money and also lost twice less money than in the preceding financial storm, which is a demonstration that what we've done to improve the situation works. And today, this represents a much lower fraction of our revenue. Our products were repriced, therefore they consume less capital, and their risk levels have been dropped. We certainly have drawn the lessons of the crisis. Once again, it is not abnormal in an insurance activity that when there are violent upheavals, a given segment of business should, in fact, bear the brunt of this. This is why we have diversified our activities, both in the product mix, the segment, and our geographies. Now, as regards your question regarding AXA Private Equity, discussions on the project are still underway, but we have given ourselves no time-related constraints because it is a field where we, as a shareholder and as our teams, need to ensure that we will be finding the best possible partner. So we are today continuing to examine things, and everything is going well. Madame de Guinière, the floor is yours. Hi, Anne de Guinière from the Figaro. Question on the French political scene. One of the candidates declared that finance was enemy number one. Did AXA feel that it was being targeted in this statement? I think we should reposition this in an election-driven context, and I deplore this because this candidate is not the only one to have demonized the financial world since the 2008 crisis. But water is here savings, life. This allows economic development, and I think that we must take care to avoid over-demonizing the world of finance, because this may very well lead to a complete turn-off of the faucet of water represented by life and savings and P&C. So I think that today, more seriously, we need to wonder about what are the right economic policies which will allow mature markets to withstand the changes in the world. Because we're talking about a crisis, but emerging markets are not. The crisis will exist for those who are not able to adapt. And to adapt, we need to undertake very strong structural changes. So I'm much more impressed by what is said regarding the absolutely necessary structural changes than by the fairly traditional and short-term and short-view verbal jostles. Estelle Durand, Argus de l'Assurance. To stay in France, how did you react to the report of the Cour des Comptes? Quite serenely, I must say. I think that as regards life insurance, we need to be very simple in our approach. It is one of the only long-term savings products. Our country, as well as Europe, have a fairly rare competitive edge. We have shale gases that we don't want to use. We don't have any oil, but we have strong savings, which, of course, brings us closer to emerging markets. Now, the question is, what do we do with this savings? Life insurance is one of the rare or subsisting products which allow us to turn towards a sustainable future for the economy. And there will not be a strong future without the taxation of a savings, which will allow, in turn, for long-term results. So taxation needs to be aligned with what we say. If we want investments and growth in the country, we need to promote long-term savings, and life insurance is a way to do it. Perhaps Nicolas wants to talk about the evolution of flows in life insurance for what we are concerned with in 2011 and the first elements of 2012. Well, 2011 until September was a totally different period, and then since 2012 we see a return to a form of normalcy. I am here talking about the market and for ourselves, because when we look at our flows to date, we are up 2% versus last year as regards our revenue. And we saw a peak in certain of our business areas in November, December, and slightly, which are now slightly higher, around 8% over our entire portfolio, whereas we had a peak in November, December. So I think that at the end of the first quarter 2011, on the market as a whole, on the last quarter, there was a disendowment approach. Or whether this involves the richest on the market or the more modest, because we saw that there was a decrease of real estate loans, which represented 15 billion euros on the market. So at the climax of the crisis, people chose to walk away from their debt much more quickly rather than invest further. And we can see that since January, flows have returned to a positive state. Virginie Geneville on GFI on this topic. Can you tell us more about the net inflow here and the spread on 2011? You mean in France? Yes, of course, in France. We can give you this, of course. I don't have it underfoot, but I'll give it to you later. But what is important is that the percentage here of unit linked was extremely resilient, which is a very interesting element here regarding the solidity of the group, because today we believe that it's interesting for our clients to invest a unit linked, particularly if they have long-term perspectives. And thanks to our agents, whether these are general or specialized in protection and healthcare or wealth management, demonstrates how engaged they are. Yes, beginning of the year, we are at 25% in unit linked on our proprietary networks. Next question. Are there questions on the phone? No? Well, if there are no further questions, no regrets, neither on the left nor on the right, near at the back of the room, as they say in auctions. Thank you, and I suggest we put an end to this meeting, ladies and gentlemen.